Hey everyone, Charlie here. We're running a quick survey. We want to better understand who our listeners are. Do me a huge favor and fill out that survey. It takes under a minute, and the link is in the show description. This helps us make better content for you. Thanks a ton for listening. Link in the show notes.
Hey, welcome back to the Mining Pod presented by Fractal Bitcoin. More on them later on during the show. We have our news roundup, Bitcoin and Bitcoin mining news for the next 30 minutes. So grab a cold beer. It's July. It's hot outside. It's time to learn about Bitcoin mining from this week. All the top headlines and also some AI HPC stuff in there. Joined by Colin Harper and Matt Kimmel. As always, Charlie Spears was on last week. Thank you, Charlie, for filling in for me. But, I deserve this speech. So I'm going to sit here and join with you guys today. Let's get a word from our sponsors and then jump into the conversation.
Today's show is brought to you by Fractal Bitcoin, but we'll learn more about them later in the show. For now, let's get right into it. You ever get into your buddy's car and think, dude, how do you live like this? There's half-eaten Taco Bell on the console, a pile of garbage and fast food cups and bags, rumbling in the trunk. You look behind you under your seat and you're pretty sure you saw something move, but you don't know what? Well, how do you think your Bitcoin miner feels if you're not keeping on top of your filtration game? Y'all need to get on Colorado Air Filters. Colorado Air Filters is a major supplier of air filtration systems for Bitcoin mining sites. And they're currently running a summer sale on their inventory, so now is the time to act. Whether you need HEPA filters, new shipments or installations for your containers, or your large-scale mining facilities, retrofitted buildings, Colorado Air Filters has it all. And units are ready to sell now. Contact sales at coloradoairfilter.com and use the code MININGPOD to claim 15% off today. Again, that is sales at coloradoairfilter.com with code MININGPOD.
Okay, we're back. And as always, we are going to start off with our hash rate index spotlight, looking at network difficulty. Matt Kimmel, what are we seeing this week in the difficulty outlook?
We're seeing more of the same of the previous epoch, which is a happy sign for the mining community. Hash price is around $60 per petahash second per day. Which, if you look at it in this halving period, is a very exciting number to see, gents. So we are 90% of the way through the epoch at the time of recording, and it's going to rise just 59 bips. Bitcoin price still near its all-time high, about 119,000. Fee market still dry as can be. Nothing really to talk about there. But yeah, I mean, it's kind of like no bad news is good news to me this week. Gents, what do you think?
Yeah, I mean, it's hard to disagree with that in the sense that, a difficulty adjustment under 1% is like almost like not having a difficulty adjustment at all. Obviously, your mining revenue is going to go down, but it's a lot better than seeing some of the violent moves upwards we've seen when hash rate is soaring. We still seem to be kind of trapped in this purgatory, right? Ever since March, Bitcoin's hash rate has been bouncing between like 800 and 900 exahashes a second. And it doesn't seem like we are breaking to the upside anytime soon, especially with summer curtailment and hot weather in places like Texas in full swing. So I think you said it right, Matt, like the fact that hash price is still at $60 per petahash per day. Miners with especially like new generation equipment have got to be loving it. And I just keep coming back to, I think most people thought we would have been higher than where we are right now. But if you go and check out a report that we published a while back by Val Rousseau, a Bitcoin mining researcher and analyst, I think he called for like 1.1 Zeta hash by the end of the year, something like that, somewhere in the realm of 1 to 1.1 Zeta hash. And I thought at the time that he was being maybe a little too bearish on it, but we're in this eternal September, man, of hash rate not really being able to breach. I think the all-time high was around 930 or 40. So let's see right here on, 944 exahashes on the 7-day average. On Luxor, it hit it on June 13th. So that call might end up actually aging pretty well. Shout out to Val Rousseau. Y'all go find him on Twitter. Go download the report on Blockspace Media. It's a great forecasting report for Bitcoin's hash rate.
$60 per petahash, better than 50. That's all I got. Okay, we'll keep moving along. Colin, I think you have our first story, which is about Cango. We haven't had a Cango update in a little bit, and we are working the emails to get them on the show. Maybe one day we'll have them join, but we have some new news about new CEO taking the chair.
Yeah, so Cango is cementing its AI pivot, or its Bitcoin mining pivot, from the car manufacturing business. Mining Pod listeners will know that they recently executed an all-stock purchase for 18 exahashes from one of Bitmain's hosted data centers, and that will put them at 50 exahashes. I believe they're there now because that transfer has been complete, making them one of the largest miners out there. They're up there with Mara, CleanSpark, and Iron, first to join the 50 exahash club this year. And now Antalpha CEO is taking the helm as chairman of Cango. And Mining Pod listeners and readers and Blockspace media readers will know that we've been kind of tracking this pretty closely. And there is a very kind of tortuous but clear web of ownership within these kind of Bitmain proxies, right? Like Cango is not officially a Bitmain proxy, but a lot of their shareholders swim in the same waters, so to speak. And now we're seeing this validated again with the chairman. I'm going to totally butcher this, Zhenjin, who is a chairman and non-executive director. He is also the founder and CEO of the Bitmain-backed financial services firm Antalpha. So the ownership web is getting a little clearer now. I think it's just a good reminder that, Bitmain at one point tried to IPO in the US. That fell through. But they're kind of slowly creeping into these US markets with some of these proxies where there's a loose connection, but there's still a connection between all of these different shareholders. That's kind of all I have for this, gents. I just feel like this is a validation of something that we've kind of seen for a long time coming with Antalpha Group taking a principal role in the direction of this company. Do y'all have anything to add?
What I'll say is that man has Cango just absolutely dived in the deep end when it comes to Bitcoin mining. I mean, they didn't even start till I believe November of last year. 50 plus exahashes, like one of the largest miners in the world. And yeah, this news item will come as no surprise to those keeping their ear to the wall in the industry. The connections between Cango, Antalpha, and Bitmain are really widely discussed, and this is kind of just evidence of that.
Yeah, good points. The relationship between Antalpha and Cango has been widely reported, including by us. We've been on the front lines of this for quite a while. So if you are interested more in the story, just go to blockspace.media, search in Antalpha or Cango, and you'll find a few of these stories or podcasts pop up. Again, it's like the story of Bitmain, just kind of like selling off some of its assets and spinning those things off, getting them into public markets. Antalpha bringing its own leadership on board makes sense for Cango. Cango basically had two co-founders who ran shop there. And for those who were stockholders of Cango back in December, they are probably more aware of this than others. Those co-founders had a lot of the company vested, and they started dumping a lot of those shares during that time as the share price of Cango was going up, right? So in November, the first announcements of this auto company in China pivoting to Bitcoin mining were made known. It had like a slow rise. It only broke into Western markets and Western media in December after ourselves and the Miner Mag published about it. And then we saw the stock price go like basically parabolic. This was like December. But then the next few days, the co-founders sold a ton of stock. And, they sold into a rising market. So like good for them, but it was kind of bad for everyone else. And since then, like it hasn't really recovered. Like it's down? It's up 170% since over the past year. What's it since the beginning of the year, Colin, year to date?
Year to date, it's 4%.
Yeah, 4%. So compare that to some of the other Bitcoin mining stocks that are out there. Bitcoin mining stocks obviously are not like doing as well as some of these treasury companies if you're comparing like on just a peer-to-peer basis. But they're also doing pretty well, especially the ones that have caught an AI HPC bid. So just from that perspective, like you just can't forget that the shareholder stuff really matters. Like the structure of a company really matters. And for people who like bought into this and got wrecked, that really matters. And then also for Cango, like they are now in this Bitcoin mining classification. They're going to have to start courting these investment bankers and bank analysts who cover this classification of companies. And they're going to need to, step up on that side of things, because there's a bunch of peers that are also building commodities, and you have to have a very solid investor basis to make this work long term. We always talk about on the show how you need how there is 5 companies out there that really can do well in the Bitcoin mining space, because there's only so much investor interest in this, and there's always this jostling the top 5. And so for Cango, with this huge exahash potential, and then also just the amount of Bitcoin it prints per month, you'd think it'd be more in the conversation, but it's not, because it's playing catch up on the investor side of things, and its investor basis was completely different. People who own this for years were investing in a Chinese auto company, and now they're owning a digital asset mining firm. Very different. There's some catch up work on that side of things. That being said, it is discounted to market versus peers on an exahash basis, and I think that might be interesting to some people.
I think you're right to hit on the share thing. That's why I wanted to get the chart up here. When Cango kind of came out of the woodwork at the end of last year, I believe we reported on it in December, following the pivot into Bitcoin mining, where they just came out of nowhere, 32 exahashes with this deal with Bitmain. The market cap at the time, even after the surge to, I think the share price went to $8, it was about 300 million. And if you can see on the screen now, the market cap is now 916 million, but we're down significantly at $5.23 a share from that $8 per share. And that's and totally because of the dilution that you just talked about, Will. They have been very aggressive with issuing new stock to achieve some of their operational milestones. For the 18 exahash deal, they issued 146.67 million Class A shares worth $657 million at the time. And so to your point about valuations, I think the bull case for Cango in the early days after they got to 32 and when they were at the $300 million market cap level, a lot of people were saying there's clearly room for them to catch up here, right? Because they are one of the larger operators now, and a lot of these other Bitcoin companies are trading at a much higher premium for their hash rate. But we haven't seen any of the fruits of that because they've been so dilutive, and they've relied on stock for almost all of their expansion. So apparently, like you said, Will, the structure of these deals matter, and the structure of how the shares are managed matter. The book for this stock is much more shallow than maybe some others. There aren't that many people, at least on the institutional side, piling into this. And there's a lot of reasons for that. We've often seen some of these companies that are helmed by Chinese nationals. They either don't market as well to the US investor scene, or there's just a little bit of skittishness from that side of the aisle with some of these operators. So anyway, last little note on that before we go to our next segment. Our next segment is how the BBB, the triple B, the big beautiful bill, will impact Bitcoin miners. So this was an article that we published for this week's newsletter, written by yours truly. This was a fun little deep dive, because when the big beautiful bill passed, there were some rounds on X with analysts talking about how this will impact Bitcoin miners. A lot of people focused on the 100% depreciation clause for equipment, which in the first year of that equipment's operational lifetime. And we'll touch on that. But there were a few other things nestled in here too that will have downstream effects for Bitcoin miners that I didn't see touched on nearly as much. So to start, we'll just go with that big one really quickly. Big beautiful bill includes a 100% depreciation clause for certain equipment. So if you buy, for instance, an ASIC miner or racks, things like that, PDUs, you will be able to depreciate 100% of that hardware the year that you install it, versus stretching that out over, depending on the equipment, like for ASICs, just 5 years. For other equipment, it's 7 years or plus. So instead of stretching that out, you'll be able to claim depreciation immediately for that year and for your tax returns. So this is a huge deal for especially smaller miners who are just in the bootstrapping phase. They will be able to write off those expenses immediately and end up reducing their tax liability as a result. So that's a net positive. As Brandon Bailey of Second Gate Advisory points out here, though, this may not be the best thing for a big public firm that is reporting to investors, because that depreciation will then detract from their net income, right? So their actual bottom line on paper might not look as healthy to some of these investors. Now, if you're sophisticated enough, you'll be able to go in and see that that's depreciation. Maybe that doesn't change your valuation of the company, but it will certainly impact how some investors view what these miners are doing quarter over quarter in terms of what they're bringing in. The other big part of this, in addition to the 100% depreciation for mining equipment, there's also a 100% depreciation clause for manufacturers and producers. So there were two of those in here. The depreciation clause for equipment for miners, you're looking at section 168K of the tax code, but they also included a new subsection of the tax code, 168N, that includes 100% depreciation for, quote, qualified production property, end quote. And this is basically property used for manufacturing and fabrication in the US. So this doesn't affect Bitcoin miners specifically, but if you are a company that is fabricating ASICs, using a foundry to create ASIC chips, even things like immersion hardware and hydrocooling hardware, this would affect you. So if you were building those things in the US, you would be able to claim 100% depreciation on the real estate property used in that manufacturing process. Not a huge deal for most miners, but I think this is in the conversation of Trump's stated agenda to reshore American manufacturing. And I think this is something that we should follow up on in the coming months to see if this is actually moving the needle for any of the ASIC manufacturers that have been setting up shop here, like Bitmain, or if this will mean anything for kind of the US's mining hardware industry, right? Maybe this will incentivize more building in the US, TBD, but that could be a downstream effect. Last part, and then I will shut up, is that the big beautiful bill will create headwinds for renewable focused miners. So it gets rid of production tax credits and investment credits for wind and solar projects in service after December 31st, 2027, unless construction begins by July 4th, 2026. So there's still a window here to harvest those credits. But if your construction doesn't begin before July 4th of next year, then you won't be able to harvest any of those credits. And the TLDR of this is that downstream, you should expect power costs in certain areas, like West Texas, for instance, to rise from this because they're no longer being able to offset those costs with some of these tax credits. And it'll be a headache for some of the miners who are trying to JV with some of these renewable energy companies, or potentially those that have went out and actually bought renewable assets like Mara with its wind farm recently. And we had some good comments from Dipul Patel, the CTO of Solana, about the potential downstream effects of this. So I would say like net, the big beautiful bill is probably a win for more miners than not. But there are still some things in there that will potentially be detrimental to some of their business models if they're renewable focused.
Colin, you did it. You got through a huge tax bill for us, and you made it really simple, saved a lot of people time. Thank you for that. Two things I want to talk on. One, for like the hosting side of things, I think that's interesting. Like if you are a hosting mining kind of guy, you have a few exahash or whatever, or not exahash, you have a few petahash mining Bitcoin on the hosting side of things, maybe a few exahash. I mean, there's some big clients out there for hosted companies. This might be interesting for you. My understanding is like you do have to go through all the rigmarole of like, filing as a company and making sure that you're depreciating it correctly, which you should probably be doing already. You should also be talking to a qualified tax helper, not just guys on a podcast ripping about it, even though I think we do some good work over here, get some tax help. That's notable, right? The other thing for like the public side is I like how you broke down that this might not matter as much because you might want to break that depreciation out over years. This is where the cyclicality of Bitcoin mining does not come in handy, right? Where it's like, okay, maybe we need to break this depreciation schedule out just so everything is like a little bit more even. On the renewable side, I don't have too much to add more than what you said. I will throw from like the other side of the bill. The Tesla stuff was really interesting. I was reading about that this morning. There was a nice piece in Yahoo Finance about how Tesla's quarterly earnings call, Elon Musk said that they're expecting to have some headwinds going forward on sales, and they're expecting to have lowered income quarter over quarter going forward because they get less subsidies from the government than previously. And that was obviously like a huge battle between Musk and the White House, and basically led to their falling out is like Elon Musk was not going to get these subsidies anymore for his Tesla company. So I think like there's some shakeups here for a lot of these companies that are building the renewable side of things. I want to keep investigating it because like these things are very complex. Like building grids is already complex enough. And then you throw in like all these tax subsidies on like a state by state and then a federal level, and it gets infinitely complex. But do expect us to have some content on that in the coming months as we find appropriate guests to talk about that subject. Matt, I'll throw it to you.
You guys should get a CPA on the pod. And this is a big one. Colin, you did a great job dissecting it, but it's kind of a win for the accountants. You could almost see it like that because you have more flexibility with the depreciation line, which is it's an expense. It's a non-cash outlay expense, but it's an expense. And you could have more intricate tax strategies, I feel like, as an outcome of this. It's part of my takeaway. The only thing that I would add is I think there's also tax deductions for R&D, which could benefit the firmware chip design community. So I don't know. This is like potentially pretty impactful policy, even though it gets really nuanced and in the weeds. So yeah, I think I would like selfishly for you guys to keep covering this and get some more experts on it. But it's quite a news item in my opinion.
I'm glad you mentioned the R&D thing. That was something that I touched on in the piece, but left out. I would be really curious to see what that does for software and services that are already like pretty much like the bread and butter, I think, of the US's Bitcoin and crypto footprint. I mean, that's really until the China mining ban, like that was the kind of sole product within regards to crypto market infrastructure in the US. It was like software and services and exchanges.
Does podcasting fall under research and development? Should we take a tax subsidy?
Is Bitcoin's most active scaling solution already here? Fractal Bitcoin's rapid hash rate growth and transaction volume suggests it might be. Today, close to 80% of Bitcoin's hash rate is merge mined and securing Fractal Bitcoin. What's more, Fractal processes over 11 million transactions daily, which is on par with the most active chains in the crypto space. Get the full scoop in our new report on Fractal Bitcoin. Explore its innovative cadence mining mechanism, emerging ecosystem of applications, and why Fractal Bitcoin is becoming Bitcoin's go-to innovation layer. Download the full report by accessing the link in the description below.
What's going on with crypto asset inflows, Matt? Seems pretty bullish, seems pretty frothy.
Exchange traded products, gents, very exciting stuff. Record inflows into a global crypto related ETPs. And so look, like the highlight here is that, we had the spot Bitcoin ETFs launched in the US January of 24, and we're on pace this year to eclipse the net inflows that really, I feel like, had a lot of people gushing with excitement as far as just demand into Bitcoin as an asset, but that proved how desirable these types of products are to go through kind of traditional, brokerage suite of financial tools, open it up to the professional investment community to get exposure. ETH has already eclipsed its net inflows from last year, which is pretty wild. But this is, I should add, this is largely US driven too. I mean, of the year to date flows into these products, 96% are US. And so while Bitcoin has really been, historically, like organically adoption wise, I would say an emerging market phenomenon, like in individuals in around the globe getting into the asset and owning for various use cases. It seems like now with the ETFs and with a lot of administration and regulatory agency changes that, there's a real shift going on as far as ownership and demand goes. And so onshore in the US there's a large appetite, and we're seeing that come through in troves.
Yeah, I'm glad that you touched on the American portion. So out of the $4.39 billion into these crypto ETPs last week. A $4.36 billion came from the US, which is just an insane statistic. So if you're a crypto or Bitcoin bag holder around the world, do your part and thank a US investor today.
No, I love these updates from CoinShares. We started republishing them, republishing them, as you see on many outlets, because it's a great little heartbeat detector for like the industry. And so, these flows track backwards, obviously, or like a lagging indicator, I should say, what's happening with people's interest in purchasing these assets. Then obviously price last week was huge, and we're expecting more of the same going into the next few weeks. I think market's frothy. Summer's been way more frothy than I was expecting. I don't have much more to add on to it, and I'm excited for the next section. So do you mind if I pull us over there?
Yeah, take it away, Will.
Let's go. Okay, so the show is quickly becoming a data center development podcast. Sorry, we love Bitcoin mining, but there's so much happening with data centers and HPC GPUs. We're going to talk about the Stargate announcement, their 4.5 gigawatt partnership with Oracle. This falls under their Stargate initiative, which obviously also involves SoftBank. There's a lot to digest with this one, and so I'm going to run through a few headlines here. The first one being the announcement from OpenAI that they have extended the partnership to 4.5 gigawatts. It's going to have top, I believe, of 5 gigawatts. They already have a little under 1 gigawatt under development in Abilene, Texas, notably with Crusoe, formerly a Bitcoin miner that sold all of its assets over to NYDIG earlier this year. And so Crusoe's not a Bitcoin miner anymore, but they do have like a lot of technology and all the expertise on developing data centers in the field. And so they've brought that over to the AI HPC land, which happens to be a little bit more lucrative right now. And Crusoe, I think OpenAI took a little bit of a bet on them, but they also know their stuff. And they've built a lot of different products over the years, from containerized solutions for Bitcoin mining and GPUs all the way to some software as well. So they're building out this Abilene, Texas location. At the same time, we have a feud of the billionaires. So all these tech billionaires are rushing to secure tons of different megawatts. We had this thread, not a tweet or an X post, I should say, from Zuck stating that they are moving forward with their several multi-gigawatt clusters. The first one is going to be called Prometheus, and it's coming online in 2026. They're also building one called Hyperion, which will scale up to 5 gigawatts. I'm straining my eyes to read his thread here.
Yep.
But it's pretty cool. If you're looking on YouTube with us or on CoinDesk TV, you'll see that he has like this fun little infographic animation that shows the Hyperion data center over Manhattan. It's basically going to be the size of Manhattan when it's all said and done, this 5 gigawatts, should it come to fruition. In the meantime, though, investors will just have to put up with a 1 gigawatt site that's going up in Ohio and currently under development. I would push people to Semi-Analysis. They're doing amazing work on this topic. We're struggling to keep up with them because they're just pumping out so much awesome info around these developments. In Ohio, the 1 gigawatt site, we're seeing a lot of standards and practices that are developed in the Bitcoin mining field be implemented for this sort of data center as well. So Semi-Analysis noted that the engineering team over at Meta have started to use basically like glorified tents to house their GPUs, as opposed to the traditional brick and mortar tier 3, tier 4 data centers that we've come to know for all the other stuff that's AI HPC intensive. Okay, one last headline to go through, and that is this Wall Street Journal report. SoftBank and OpenAI's $500 billion AI project struggles to get off the ground. So this headline, it's kind of unclear like which came first, but it does seem like this Wall Street Journal report came out first before OpenAI responded with the headline we led off with about them going forward with their 4.5 gigawatt investment. This investigation by the Wall Street Journal suggests pretty strongly that they don't have the money. Specifically, SoftBank does not have the money, and that a lot of the Stargate initiative was bluff and huff and puff and nothing real. This was also noted at the time by some of our favorite aluminum capped heads on Twitter, like Zero Hedge. Elon Musk tweeted at the OpenAI announcement in January that they didn't have the money. SoftBank didn't have the money. Sam Altman didn't have the money. Seems like Sam Altman and Oracle have the money. Oracle stock has been ripping after some of the announcements around the deals between OpenAI and Oracle. So that's been great for them. But in the background, we still know that SoftBank hasn't signed any deals for data centers. And that's the thrust of this Wall Street Journal piece. So I think we got a few things to pull on here, and I'll pause. Between Sam Altman, the Stargate development, what Zuck is doing, building his own data center locations, and Elon Musk building his Colossus Center in Memphis, we have more interest than ever and more cash flowing into data centers than ever. And this week, among other weeks, stood out as worthy of being a section in the mining pod.
So going back to the funding piece, I'm glad that you brought that into it, because I saw that headline before the press release from OpenAI, and they're obviously in conflict with each other, right? You're not going to break ground on a 4.5 gigawatt facility if there isn't some funding in the door. I just ran some quick back of the napkin math. If we assume a $10 million per megawatt cost for one of these data centers, the one that OpenAI is building in partnership with Oracle in Texas would cost about $45 billion. If we go on the higher end at 20, then that's $90 billion. Clearly very, very capital intensive, but I would be shocked if they couldn't wrangle at least that much. But we will obviously see just how much funding they have over the coming years, depending on how well this facility does and if they have to scale back their ambitions, But I would think it'd be very brazen to just kind of publicize this without having some money in the door. That being said, it could be very well possible that investors are getting fatigued with the whole AI thing, and they're starting to look at how much it's actually going to cost to build some of these things, and maybe the dollars and cents don't make sense for a lot of people. And that's kind of my only comment there. The only side note I want to make, this is not necessarily related to the news at hand, but I just want to point out how many likes Zuck got on this Threads post. Got 79 comments, 624 likes, 54 reshares, and 283 people sending it to out of the Threads thing. If this were on X, this would have blown up, had thousands of likes. I'm just saying you can't replicate network effects no matter how much money you have.
Yeah. So what's standing out to me when I read these headlines now about these different AI deals is just how far we've come from the energy worries of the ESG times. I mean, 4.5 gigawatts is, like, for context, like millions of residential homes. And these things are like cheerleaded now, and like it's kind of refreshing to see. I think energy development's an excellent thing. And like, the administration motivated prioritizing investment into these fields. It's just, it's a 180, right? I mean, it's pretty wild to see. And it really has taken a concern, like a kind of a rude eye that was on the Bitcoin mining industry away. And so, yeah, I mean, I'm excited now that a lot of the companies that have been spearheading the Bitcoin mining efforts don't have to waste their time trying to debunk energy concerns, right? Environmental concerns, and make ESG reports. That's like a zoomed out view. And yes, you guys talked about many interesting things that I share as part of hearing about these deals, but I just don't want to be redundant. I think if I zoom out, that's one thing I notice here.
I think that's a really good point, looking at the kind of cultural shift in terms of energy use. I mean, you still have some people, particularly on the left side of the aisle, who are screaming about these things and don't want these massive data centers to happen and suck up energy. But I can't help but think, per your comment, Matt, that it's like the hotline bling meme, where it's like when you're talking about using gigawatts to mine Bitcoin, everyone says no. But when you're using gigawatts to produce Studio Ghibli AI images, everyone says, yeah, that's great. I can use that in my everyday life. Forget decentralized non-nation state electronic money. Studio Ghibli, right? I'm going to get behind that. So, I mean, I do think it is a kind of validation that for most of these people, they're okay with seeing the energy use, that they can see how it directly impacts their life. So, but I do think it's good that we're moving towards a place where the kind of ESG degrowth narratives are not really gripping the cultural conscience as much.
One other thing, it's like Oracle got this bid, right? But OpenAI is also working with CoreWeave. It's like there's major infrastructural, traditional, strong precedented players that are also in this space. And you wonder, I wonder, if they are also looking at some of these data centers that miners have occupied post the China ban, when a lot of facilities basically became funded and built out by strictly Bitcoin mining subsidized companies, right? So I don't know. It's a continued story. You guys are covering it already, but it's a continued story that I think is going to be really interesting.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin. As our cry corner this week, I will take us away, and we sort of had two choices here. We could talk about MicroStrategy.
There is no second best.
Decide to pivot and talk to you guys about a fund that blew up. And then on top of it, the guy who blew up the fund is now raising for a Solana treasury company. So this cry corner sort of has it all. The story here, the protagonist or antagonist, depending on if you have money in this guy's fund or not, Joe McCann is a well-known trader in the crypto space. He had a fund, a liquid trading fund called Asymmetric, and some tweets started circulating around from one person who ostensibly was an LP in the fund. This is not confirmed. It was just kind of a tweet going around showing that they had lost about $3+ million of the $5 million or so dollars they had given Asymmetric, and that they were down basically 80% or over, slightly under 80%. I think it was like 78% from being in the fund. That was getting all over Twitter. The screenshot was going all over the place. And then there was a tweet from Jim McCann talking about this, saying that they had leveraged the liquid fund into an aggressive airdrop strategy that had not worked, but they were hoping that it would work in the long term. That tweet was not confirmed anywhere. I could not find it anywhere. Could have been fabricated. So kind of went cold for a second. But then finally, Jim McCann tweeted himself, I believe it was yesterday, talking about how they were actually going to shut down the fund after underperformance. And so we had the first confirmation that this liquid fund had basically taken a lot of investor money, gone leveraged long into altcoins. Those alts had gone really poorly, ripped downwards. The fund was down to 80%, and he was shutting down the fund. Fast forward to this morning, and Unchained, one of the other crypto publications out there, got their hands on a deck showing that same guy in charge of this fund is actually trying to become the CEO of a SPAC that is going to become a Solana treasury company. They're looking to raise $1.51 billion to purchase Solana. And this trader, who is the head of the liquid fund that just shut down, will become the CEO. Adding a little bit weird twist here, he's also a podcaster on Unchained. So that's kind of like a weird thing. Like they're reporting about like one of their podcasters. I guess he's just like a contributor. But I think this story like really qualifies for our cry corner because we typically talk about adventures in shitcoin land that do not go well. And this one highly qualifies for it. So
farming airdrops, is it 2023? Is it 2024? I think this is a good example of skating to where the puck is already gone and falling flat on your face, because all this guy had to do was ape into Bitcoin treasury equities and no one would be mad and the fund wouldn't be down 80%. But he got trapped into chasing altcoin pump and dump schemes with yield farming and, airdrop farming. And I'm not trying to dunk on him too much, but I think it also just goes to show how alts have really underperformed this cycle in ways that most people were not prepared for, I don't think. I mean, the financialization of Bitcoin has been horrible for the altcoin industry because people are no longer really looking to chase those trades. Maybe we'll get an alt season later this summer or later this year. But why would you do that when all of these Bitcoin treasury companies are popping off? And that seems to be the obvious trade this cycle.
Yeah, I know basically nothing about the story. But what I'll add is that these treasury companies, whether it's Bitcoin or ETH or Solana or whatever, I heard of a Doge treasury company this last week. I don't know if it's actually real or if that's just a rumor, but I don't know. They make me very uncomfortable. I don't know about you guys, but it's like there's nuance to this, and I am not spending a lot of my time researching these things. But what it feels like from afar is a lot like the in altcoin land when VCs get in at low prices ahead of time and then dump on retail when the narrative strikes and the markets gets hot. It just kind of looks and smells like private placements ahead of time, and then these companies go public via SPACs. They get a lot of attention. Everyone posts the premium to NAV with the expectation it's going to go up in the future, and then they dilute. People sell out. They keep buying, try to keep pumping. It doesn't feel like it's going to end well, and that's my general view on it. I don't know. Take it with a grain of salt, certainly.
Cry Corner always ends up being a little bit of a dunk on somebody who hasn't done so well. Running a liquid fund is obviously very difficult, but it seemed like the playbook here was to aggressively farm some airdrops, specifically the Hyperliquid airdrop is what it looked like, which has been like a very performant alt over the course of the first half of the year. We'll wrap up our Cry Corner. I think that fit pretty well. Best of luck for everyone who was involved in that situation. Not super great. This is why we stick to Bitcoin. We'll jump off from there. Everyone enjoy your weekend. We got some great content coming up next week, and there are a lot of quarterly earnings. So if you're going to want to pay attention to any of those, you can go to the Mining Pod YouTube account or our Twitter and watch those. We'll be putting out most of the quarterly earnings for Bitcoin mining companies. So we'll see you guys next week. Colin, Matt, thanks for joining. Bye, guys.
Hey, everyone. Charlie here. We're running a quick survey. We want to better understand who our listeners are. Do me a huge favor and fill out that survey. It takes under a minute, and the link is in the show description. This helps us make better content for you. Thanks a ton for listening. Link in the show notes.